All right. Good afternoon, everybody. Chris Lester. I like to be on time. Your time, my time, and Apple phone time is 4:30. We'll get started. Just wanted to start off the call with an important announcement that I think in 4 hours I will have made it to age 59. So thank you all for celebrating my birthday with me, and appreciate all of you. Without further ado, this will be a pretty easy call. Things are good. Last month, July was good. You'll hear me talk a little bit about, storm clouds, but I think bar anything extreme, I think we'll get through the remainder of the year. But I'm starting to see some churning in the water volatility. So we'll talk a little bit about that. But for the most part, this should be a positive call. So remember, even though this says August 2023, this is a look back, rear view mirror approach. We're looking at what happened in July, right? So this is a July update. So we're going to start with equities in a month to month. What really took off, and it looks really impressive, is commodities. And commodities are made up of energy. That includes oil, gas. Then you have agriculture and precious metals. So I think there's a combination of reasons why that spiked, but again, it's only for 1 month. And I think when you look at the next slide, you'll be like, I wouldn't be moving all my chips there yet, right? But overall, July, everything finished on the upside of zero. So again, that was positive news. And now we're going to take a pullback approach and say, hey, how's the year been faring? And overall, pretty good. But we'll start at the bottom and look at commodities. So although it's had a run in July, it's really digging out of a hole. And that's just because of the pressure that, oil continues to put on, I think, everything as we go forward. So it's, precious metals, energy are something that will, I think, affect everything. But as I look at the top three, S&P, we have developed countries, that's European countries, and small businesses. All of them are doing well. Now the pink is developed nation or undeveloped nations like China, Indonesia, Brazil, and it's still doing well. So for the year, equities have been okay. And I think that's good news compared to last year. So, our three Wiseman chart tends to tell the same story. So as we look at it, remember, if we have a vertical green line, that tends to suggest that things will start to continue to move in an upward trend until we see negative pressure. So it was long time coming, but it finally happened about 2 months ago. And it seems to be in that continued upward momentum. So, I'm not going to get into all the different technicals, but it's just a indicator. It's a measurement of, from a technical standpoint of how we feel equities across the spectrum are doing. So overall, I think that's positive and good news. Now, when we get to income, right, we're going to look at for the month of July. Everything was okay except, the treasuries, 20-year treasuries long-term got beat up a little bit. But overall, I think most people are doing okay, but the month is starting to feel a little challenging compared to what it's done year to date. Year to date, everything has been above zero. Now, remember, when you enter into retirement and part of, professional planning services, our philosophy is that we believe that retirement is about income, and creating income strategies. It's important. And so it's not just our theory. I mean, there are many, many people that buy into this school of thought. And if we're going to drain our accounts, right, and live off of income, we have to make sure that we're A, outpacing inflation, and B, not necessarily eating into the principal if we can help it. So as we look at it, what did the best, right? We have the high yield corporate bonds. Now, it's been a while since I've talked about them, but high yield, when you see that, replace those words with junk. So what that tells me is that people were okay with equities, but they wanted to bounce their portfolios, but still wanted yield. And so that's what we're seeing there, is that 5.65%. but things can turn south quickly if corporations can't pay their creditors as agreed. So that's when you will start to see that. But right now, this is a positive sign, right? That yields are there. And then the next green one is international, right? So that's like Europe. So the bonds between those 2 or 3 top holdings are saying, hey, listen, we're going to be able to pull off 3 close to 4. And that's what you typically, we at Professional Planning Services like to use as a benchmark for rate of return. We try and achieve 4%. So it seems like the bond market is, some of the other ones are a little bit lower than that. They haven't fully caught up yet, but as time moves on, you'll start to see these creep up. But overall, income portfolios have done well for the year, right? And that's good news. So again, we have a green line here. And so, as we're looking at our portfolios, right, there shouldn't be any major adjustments. But now I'm going to just, this is just my opinion based on, what I'm hearing, when I'm talking to folks and what I'm reading, tells me that I had at the beginning of the year said, hey, caution towards Q3, Q4. We're approaching Q3 right now, right? So as we do, what's that leave for, for the rest of the year? I think we'll be okay, right? I think that there's enough wind in the sails to keep, returns, but we will have some chop in the water. And I use some nautical terms because as that chop starts to build up, that will slow some of the efficiency or headway that we were making as we make it through the ocean. So if that's the case, is there storm clouds on the horizon? I was on a call with somebody this morning, and that is one of the areas that I am concerned about. I do believe that the cost or that to borrow money, and what I'm seeing with the housing markets, and as I talk to contractors, that I am starting to slowly see a slowdown, right? It doesn't mean that the sky is falling. It just says, be aware that we're starting to see a pause, right? Now, will that mean a recession? Will that mean a depression? None of those things right now do I have a clue. But I'm just saying that will we see the types of returns that we just saw in the equities into Q1 and Q2 of 2024? And I think not. I think that we're going to have some pullback. And as we do, to what level, several factors will play into that. So that's my summary for the month. And like I said it from the beginning, it would be a short call. But I do want to say that this was the other number, right? That our number 89, actually this should be 88, but last month it was 88 or 89. So our recession probability analytics tool is still showing, be careful. It's like, just think of it like, hey, flashing red light, right? There are things out there that are causing, the algorithm to say we're above 50 says, hey, a recession is probable. We're up into the almost 90s now. And if that continues, at some point in time, this is a bellwether that's going to say, yes, that did come to fruition. But I don't think it's going to be right now. I do think that as we start to look in, Q1, Q2 next year, we could start to see some of that pain. Right. So that's my summary. I see I got something in chat. So Gene, thank you very much. Happy birthday to me. Yes, I made it. And then we have to play this by compliance rules. So I'm going to play my little slide here. And then if you have any questions, please reach out. Right. Everybody have a great day. And next week there is a call, but then the following week there will be no call. I don't know the topic for next week. I'm still working on it, but we'll go from there. Have a great day.